Look around you, different things born out of truth and passion. Business software, it's our craft, our identity. Thoughtfully engineered, passionately designed to help you transform your business. Zoho, made in India, made for the world.
Well, yes, so the IT sector is going to be in focus beginning next week. From the 9th of October, you'll have TCS, the first Nifty IT company and the first overall Nifty company to kickstart the Q2 FY26 earnings season. And here's what analysts broadly are estimating for the entire IT sector to perform in terms of their Q2 numbers. A muted quarter is expected, not much happening once again, and no big surprises here. We're expecting Q2 to be a soft quarter, and the revenue growth is pegged at negative 0.4% on a sequential basis for the tier 1 IT companies. That would be Infosys, TCS, Wipro as well as HCL Tech. Now if you take a look at some other factors, margins are expected to remain broadly stable. Large deal wins have continued for IT companies. Those are some announcements that we have been tracking, but conversion into revenue, that remains slow, and there could be some meaningful pickup in second half. So the second half could maybe hold some more promise for the IT space. In terms of the vertical outlook, banking and financial services, BFSI remains weak. Retail and high-tech IT also, they remain muted. Manufacturing and energy verticals are expected to do better compared to other peers for these IT companies. If you compare tier 1 and tier 2 IT companies, tier 1, so your big four, Infosys, TCS, Wipro and HCL Tech, cautious outlook is expected and weak discretionary spend is something that we're expecting to see. On the flip side, for tier 2, the mid-cap end of the IT basket, margin pressure persists despite selective outperformance in ER&D as well as the digital segment. Now, in terms of earnings, Infosys and Wipro may lag overall peers. TCS is expected to hold ground and hold steady. HCL Tech could be supported by ER&D and their cloud segments respectively. In terms of macro impact, global macro uncertainties have been weighing on the IT space, so that's one crucial factor to watch out for. Delay in decision making could be an outcome of that, and slower discretionary IT spending remains to be the big headwind for this entire space. So lastly, to sum it up, what are going to be some key monitorables? Management commentary on overall FY26 guidance, deal pipeline execution and margin levers, and the margin number, of course, are going to be some important factors to watch out for. But all in all, we're expecting a muted or a soft quarter for IT for Q2.
Okay, so that's the expectation, and possibly any surprise could well lead to upside. Sudip Bandyopadhyay joining us on the show, Group Chairman, IndiTrade Capital. Great chatting with you as always, Sudip. Let me start off with your take with regard to the IT index and constituents. What are you penciling in terms of the quarter? What are you looking forward to, if at all there is something?
Well, not really. I think, the quarter wouldn't be good for IT. We have already seen Accenture commentary and the numbers. We don't expect anything positive coming out of the quarterly results. However, what we will watch, it would be the commentary of the management, and we'll try to gain insight into the second half of the current fiscal from their commentary. As far as HCL Tech is concerned, we are thinking that we are kind of estimating that the results of HCL Tech may be a shade better if you compare with the peers, because they have ER&D vertical, which we believe should do well. Cloud and ER&D both should do well. Overall, I think BFSI, we all know, has been weak. Retail has been, kind of subdued. The only segment which will kind of perform is the manufacturing vertical for the IT companies. And, HCL Tech, that's the reason why we believe that HCL Tech will probably deliver a better, relatively better set of numbers compared to the other big IT companies. We are positive to an extent on the performance of some of the mid-cap IT companies who cater to niche segments like travel, tourism, automobiles. Some of these companies will show good numbers, and of course, commentary will be extremely important.
Why HCL Tech? Why are you bullish with regard to that one?
Well, I think, they have significant presence in the ER&D space. And this is one space where we think the timing right now is right, and the numbers should start flowing in. The cloud business of HCL Tech also should be good. And I think, HCL Tech has suffered quite a bit because their skew was towards ER&D for a long time, and ER&D wasn't doing well. Now the time has come for that segment to start performing. That's the only reason why we are a little bit positive on HCL Tech. But remember this, we are saying relatively. If you compare the other big IT companies, we believe that they are relatively in a better position due to their focus on ER&D.
Keep you clued on with regard to developments with regard to banking, because we'll have a slew of updates which will come over the weekend as well. So we'll have to be on top of that come Monday morning. But Kapil Shah also joining us at this hour. But let me quickly also address the flashes at the bottom of your screen, because what we're seeing is Panacea Biotech. They've got a letter. They've got an order win from the UNICEF for supply of bivalent oral polio vaccine with effect from 1st of April, and the order is worth approximately 315 odd crore. Q2 calendar year 2026 and calendar year 2027 thereafter is when the supply starts. Of course, the stock booked up 4% on the back of that, and in fact from the lows of the day, much more than that. That stock also in focus. I want to quickly though take it across and give quickly ask Sudip a question with regard to pharma, because that's a basket which we don't talk much about, at least at this point. Nothing much happening there, but plenty with regard to tariffs. Sudip, how do you view that basket?
Well, I think, you mentioned the word tariff, and I think that's the biggest uncertainty surrounding it. We have probably dodged the bullet at the first instance, apart from Sun, which had some, branded drugs. Most of the other companies are not affected at all by the current tariff regime notified by the US president. Even Sun, I think with the developments which happen subsequently, they will also dodge the bullet. But having said that, I'm a little worried on the CDMO players. You see, they're not directly impacted, definitely, but the insistence on investment in US may lead to a lot of these large multinationals putting up facilities in US, and the order flow or the future order inflow to the CDMO players may dry down, and there may be challenges going forward. So it is not a primary impact at this stage, but the secondary impact or the tertiary impact on the CDMO players may come in. So I'll be cautious on the entire pharma. And remember that this entire tariff, for lack of better word, tantrum hasn't yet ended. There can be more, and we need to be extremely cautious. So if somebody has to look at pharma, and this view I've been maintaining for quite some time, look at domestic pharma companies or companies having significant business in the domestic market. Domestic Indian pharma is growing by about 25% CAGR. Let's focus on companies focused on domestic market and also markets, non-US markets. I think that's a better bet to take as of now. We have been liking Mankind Pharma for a very long time, and we continue to maintain our view on that. They have about 95% of their business coming from domestic sales. So let's look at companies which have got limited exposure to US at this stage. That would be a better strategy.
Well, talking about pharma, Wockhardt clearly was the one star performer in the last 7 trading sessions, and it seems that they've already applied to seek the US FDA nod for their miracle antibiotic, that's Azenic. In fact, we should just bring up, the sound bites as well from when we did speak with Habib Khorakiwala, and he was indicating that within the due course of the week, they would be applying to the US FDA. But Kapil, on the charts, any pharma name looking good to trade?
Yes, first of all, good afternoon, everyone. So on the pharma front, there are very few stocks out there which has shown the very strong outperformance. But today we are seeing that there is one stock like a Granules. It is from past 3 trading sessions, it has been moving quite high, and today it has broken out a kind of the 100 days consolidation patch of kind of thing. Means the 550 was the immediate hurdle which has broken out on the higher side. So we anticipate that up to the 540 level, this particular stock remains on the positive side. So it can be viewed as a kind of the accumulating stock, not outright buy at one go. And on the higher side, the upside potential can be around the 585 or so.
All right. Okay. Thanks for that view coming in, Kapil. Kapil, sorry, just taking a step back, trying to understand your view on the index and the bank nifty, the Nifty 50 and the bank nifty.
So yes, first of all, coming to the Nifty 50. So Nifty 50, after the 7 to 9 trading sessions, a declining momentum, it has come to the lower band. I think from past 90 trading sessions, the broader range for the market has remained 25,200, 300 on the high side and 24,500 to 24,350 on the lower side. We are a little bit middle to the lower band kind of the things that we have been seeing. But after the 9 days trading sessions decline, we are seeing some sorts of a resumption is happening. But we will become more firmly bullish on the market once it starts to sustain above the 25,000 level. Till then, we are a skeptic and sideways to negative view. But on the contra side, yes, 24,500 to 24,350 can act as in a good support level where the buying interest can be garnered. And as far as the Bank Nifty is concerned, so Bank Nifty has underperformed a lot earlier, but nowadays we are seeing some sort of uptick into the private banking sectors, and PSU banks continues to move on the high side. So relatively strength has been better off for the Bank Nifty. Right now the 55,600 level is trading on. So we are seeing some sorts of a further uptick, and at least on the higher side we see the upside potential around 56,200 level.
Okay, that's the take coming in on what you're seeing on the charts for a Nifty bank as well as the Nifty. But Sudip, you think, a part of the GST benefit could also trickle down to players like a V-Mart or a Style Bazaar perhaps?
I'm pretty confident about both the names you mentioned. I think though we may not see it immediately flowing, but definitely incremental income in the hands of common man will help V-Mart retail as Style Bazaar and the other value retailers going forward. We have already entered a festive season, and I think it continues till end December at least. So it's a pretty good quarter when I think they will definitely see incremental sales. We understand that there has been improvement in the rural income scenario and even urban income scenario. And, unless we see some major reversals in the climate whereby massive rains affect life in October, I am expecting much better performance from these value retailers in Q3.